Okay, so is there any homework in the previous class? I said good evening and no one said anything in reply. You like to be silent, like don't say anything.
Good evening, sir.
After saying, okay, okay, so we have started the redemption in the previous class, so I don't think there is any homework. So in redemption, we have discussed about the method, debenture redemption reserve. Yes. So debenture redemption reserve we have started. I told you to like we will discuss debenture redemption reserve once. Okay, so
Good evening, sir.
hello Abdullah, good evening.
Hi, sir. Good evening.
Janumi, now you can say something. Is there any network issue?
Sorry, sir.
No, I'm asking from Janumi. Your name is Abdullah, you forget?
Oh, okay, okay. Say.
Okay, so your voice is not coming, Janumi. So there is some issue with your mic, I think. Okay, so in the previous class, I have completed the basic important terms. Now I will discuss the debenture redemption reserve. So this is debenture redemption reserve. You can see here. So debenture redemption reserve is set aside for the redemption of debenture out of profit or reserve available for distribution of dividend. So this amount is transferred before the process of redemption of debenture begins. Means, let's say there are some process for redemption of debenture. So if company has decided that they will they will redeem the debenture, then before the process start, I have written this here also. Before the process start, we have to transfer the balance from profit and loss account or general reserve, which is available for distribution of dividend, to a separate account called debenture redemption reserve. Okay, and this account, this reserve, cannot be used for issue of dividend, like dividend payment. So we can utilize it only for redemption of debenture, not for any other purpose. So first it was like in the general reserve or profit and loss account, which can be utilized for any purpose. So that's why we have transferred the balance from reserve or a statement of profit and loss balance to the debenture redemption reserve. So this is written here that DRR is a reserve set aside for redemption of debenture out of profit or reserve available for distribution of dividend. Amount is transferred before the process of redemption of debenture begins. The amount set aside shall not be utilized by the company except for redemption of debenture. So there is only one purpose, and it is redemption. Now, Rule 18(7)(b) of the Companies Rule 2014 prescribes that a company shall transfer at least 25% of the face value of outstanding debenture to DRR. Uh, Now, in the previous class, I have told you that there are three, sorry, three methods. Yes, out of capital, out of profit, and out of capital and profit, both. Somewhere I have written this. Yes, here. Source of redemption from profit, from capital, from profit and capital, both. So, out of capital, when we say that redemption out of capital, so it means totally there is no transfer of like general reserve or profit and loss to debenture redemption reserve. Okay, because it is redeemed from the capital, so no need to transfer from general reserve. But if it is out of profit, then you have to transfer the amount. Okay, so first of all, out of capital. So it is not allowed. It is not allowed by the government in like today's time. It is not allowed that 100% out of capital you cannot redeem your debenture. Okay, so it is only allowed in case of companies which are exempt from issue or sorry company which are exempt from creating DRR. So there are two types of companies which are exempt from creating DRR. The first one is All India Financial Institution regulated by Reserve Bank of India, and the second is banking companies. Now, debenture redemption reserve is not required on convertible part of debenture also, because if the debenture is convertible, then it will be converted, not redeemed. Means you don't have to pay the money. You will issue your share. So you can say it is also out of capital. Okay, because you are taking the debenture bank and giving the shares. So share is part of capital. So it is redemption out of capital. Understood?
Sir, this won't come for the exam, right?
Yes.
It will.
It is not included in the syllabus.
No.
But you said the debenture is included. Yes.
Yes, the issue of debentures is not redemption.
Okay. Redemption is not included in the exam,
No.
but it is part of syllabus.
No, sir. Only till once again, let me check.
Okay. Now I have to confirm from all of you. Okay. Actually, it is part of CBSE syllabus. So, can you all check and tell me that debenture redemption is not in your syllabus?
It's there till writing off.
Writing off,
Writing off debentures or loss on issue of debentures.
that's it.
Yes. Just the part, the issue at par and redemption at premium till discount. That's the only part that's there.
So, redemption of debenture, you are saying it is not included in the syllabus. Abdullah, can you tell me, confirm this? If it is not, then we will move to the next topic because we have already wasted one day in this. But Maria, you were in the previous class, yes?
Yes, sir.
You didn't say anything at that time.
No, because you were just explaining the definition of redemption. We did the issue of debentures at with items of
With
redemption.
terms of
We did
redemption,
that.
yes.
Yeah,
Yes.
we did that. And then you started explaining the theory of redemption. So I thought it was included. But then all this, it's not there.
Okay. Madhya, Abdullah, Shahrukh, please confirm. If you know, otherwise we will discuss another topic. We have some topic left to cover. Say something. You're like not saying anything. Say yes or no or don't know something.
Sir, I will have to check.
Okay. So Maria is only one have the information like this. Anyone else? Janumi, Madiha, Shahrukh, anyone? Yes, no, or don't know. Just say something.
No, sir, it's not included.
Okay. You reply very late, Shahrukh. Why?
I am checking it's included or what.
Okay. Okay, Madiha, don't know. Okay, so I have received two confirmation that it is not included. So, okay, leave this part then. We are not going to discuss it here. So, what are the topics still left? We have discussed this in the previous class. Yes, yes, yes. Uh, so, ratio and cash flow now left. Yes. So, which one we should start? Ratio will be fine. Yes. Accounting ratio will be fine.
Yes, sir.
Okay. So, is this included in the syllabus, Maria?
Yes, sir.
Okay. And what
But
about cash flow?
I think it's better if you start with cash flow.
Cash flow. Okay.
Yes.
Now it is confusing. Shahrukh, you said ratio. Cash flow is fine.
Okay, sir, no problem.
Okay. Anyone have like any specific requirement? You can tell me. If there is any like confusing things, then we will vote. It is democracy. Abdullah, you are not there. You are using your mobile phone again.
Sir, there are 3 people in my background talking.
There are.
Three people of my family talking in the same room.
So what happened? I actually you have to say for little bit. So that doesn't matter. Tell me which topic we should start.
Sir, I recently did cash flow, so I think we should go with that only.
Okay, cash flow. Then we will start cash flow. There are three answers in like, okay. So Maria said, Shahrukh also confirmed, and now you are saying. So I think if Madiha and Janumi said the ratio, then also three vote is higher. Okay. So let's start with cash flow statement. Now, first of all, what does it mean by cash? What does it mean by cash? Anyone have any idea? No. Okay. So, first of all, cash here. Generally, cash relates to only two things, cash in hand and cash at bank. But in cash book, cash flow statement, cash means more than this. Okay. Cash means cash and cash equivalent. So, cash and cash equivalent. So under cash and cash equivalent, we include cash in hand, then cash at bank. There can be checks, drafts in hand also. Then there is marketable securities or very short-term investment. So marketable securities. These are included in cash and cash equivalent. Okay. So now cash flow statement. First of all, what is the meaning of cash flow statement? So cash flow statement, you will see the meaning here. The slide I'm sharing, can you see?
Sir.
Yes. So cash flow statement is a statement that shows the inflow and outflow of cash and cash equivalent during a certain period. It also classifies the source and application of cash and cash equivalent. Now, uh, in a year, the time period we are taking a year. So in a year, there are various inflow of cash like sale, commission received, sale of assets, any amount received from government side. So there can be various type of receipt. Then there are various outflow of cash also, like payment to creditors, cash purchase, payment of expenses, different expenses, payment of tax, all these things are outflow. Okay. So inflow means cash is coming, outflow means cash is going. So there is various type of cash inflow and outflow during the year. So what is the effect of these inflow and outflow on the balance of cash and cash equivalent? Okay, because there is opening cash and cash equivalent, there is closing cash and cash equivalent. So there are difference between these two will never be same, or you can say generally not same. Sometime it may be, but generally not same. Okay, so if it is not same, it means during the year there are some transaction happened which affected the balance, the opening and closing balance. Okay, and these transactions, these inflow and outflow related with which category? For this purpose, cash inflow and outflow is divided into three categories. Okay, three categories. These categories are like cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So cash inflow and outflow is divided into three categories, and how we are getting our cash in the business and how it is utilized means source and application of cash and cash equivalent. So this is our definition of cash flow statement. So cash flow statement is a statement that shows the inflow and outflow of cash and cash equivalent during a certain period. It also classify the source and application of cash and cash equivalent. So this is the meaning of, this is the definition of cash flow statement. Please write this. Then we will discuss the advantage and disadvantage. Okay, who have already studied the cash flow statement in the school or in like somewhere else?
I have.
Okay. So you have not understood the like the solutions or the question that you have solved or the theory you have studied.
Just the financial activity part, I get confused there.
Only financial activities.
Yes.
The but most difficult part is operating activities, I think.
No, that's easy.
Okay, that's great. Great to hear this, that the operating activities is the easiest part. Done? Only you have to write definition, not advantage, disadvantage. Just wait for the advantage and disadvantage. Okay, so now the advantage. The first thing is facilitates in ascertaining cash flows. Okay, so how much cash we are going to receive and how much cash we are going to pay. So it helps in calculating these, and on the basis of these we can like assess the future situation also. Okay, we can plan the future. Okay, so like in current year, let's say if we have received cash of 5 lakh and we have paid cash of 3 lakh, so we have 2 lakh in surplus. Now in the next year we know that there is a additional cash outflow of 3 lakh. So 3 lakh is already happening and 3 lakh additional. So total cash we need is 6 lakh. and we have cash inflow of 5 lakh in the current year, so we assume it is same in the next year also, so 5 lakh. So in that case we have to like uh, arrange for this 1 lakh extra fund. So that's why it helps in like forecasting the cash inflow and outflow, so helps in planning also. So first is facilitates in ascertaining cash flow, and the second is helps in planning. The third is helps in assessing liquidity and solvency. Now, what is the meaning of liquidity and solvency? Liquidity means we are able to pay our short-term liabilities, and solvency means we are able to pay our long-term liabilities. So helps in assessing liquidity and solvency. The fourth one is efficient cash management. So if you record all the cash transaction, obviously your cash management will be better in like real life also, in our personal life. If we write every income or expenses that we have done during the year, or during the month or during the week, then it is very like easy to manage the cash. It is very easy to manage the expenses. So if we are writing all the expenses and income, then we can easily find out where the money is coming or going. Okay, so then it will be very easy. And also to control these expenses and income, uh, it will help. So efficient cash management. The fifth one is comparative study. So financial statement, this is the feature of financial statement, comparative study, because you can compare the previous year data with current year data. Also, you can compare the this company data with some other company data. So this is called comparative statement. So current year, previous year, or one company to another company. So cash flow statement is also help in comparison, like previous year cash inflow, current year cash inflow, previous year cash outflow, current year cash outflow, our cash position, and in the industry, other competitors' cash position. So these will help in like finding the strength and weakness of other companies as well as ours. So comparative study will be helpful. The sixth is helps in decision making. I told you, to take decisions, we need different kind of information. We need many information, because without information, we cannot take decisions. Okay, so cash flow statement helps to like take decision about cash, because it is mainly related to cash. So we cannot say it help in other things also, but it helps in decision making related to cash. Okay, that how much cash we need. I have told you just now the example that we need 6 lakh cash and we have only 5 lakh. So 1 lakh we have to arrange. Now this 1 lakh we can arrange from different source. If we know it in advance, then we can arrange it from like a cheaper source. And if we are like don't know this in advance and we need it very fast, then we have to go for like the most costly source, because sometime when you take loan from bank in like fast, so you need money very fast. In that case, bank will charge higher interest, because there are you can say there are different type of loan bank provide. Some of these loan have higher interest rate and some of these loan have lower interest rate. Like if you go for bank overdraft, it will have a lower interest rate. If you go for a personal loan, they will charge you higher interest. So it depends on the situation. If you need money faster, then you have to choose the like costly source. So that's why it helps in decision making also. When you have to take loan, when you have to arrange funds from different sources, so these things, cash flow statement will help. Now the limitations, the disadvantage of cash flow statement. So first of all, non-cash transactions are not shown. I have already told you this at the time of financial statement, that limitations, you can say it is same thing like advantage, but presented in negative way. Now, cash flow statement is related to cash, so obviously it will not include non-cash transaction. Okay, so this is feature of cash flow statement, not limitation. Okay, but it is written here. You can see non-cash transaction are not shown. The second is historical in nature. Obviously, financial statement is prepared for the past because all the past transactions are shown in the financial statement, not the future transaction. So it is historical in nature because cash flow statement is also prepared from financial statement. It is part of analysis, cash flow statement, fund flow statement, ratio. So all these are analysis. All these things prepared from financial statement. So if financial statement is historical, then obviously all these things will be historical. So cash flow statement is also historical in nature. The third is assessment of liquidity cannot be done. Now it is saying that assessment of liquidity cannot be done because we don't know about the position, the liquidity position. Okay. So the thing is, liquidity is always depending on the short term cash and bank balance, obviously. So we have different type of loans, like let's say there are creditors, there are bank overdraft, cash credit. So short term loan. Okay. Now short term loan, we rarely discuss in cash flow statement. We only talk about the shareholders fund, non-current liabilities. We only discuss about non-current assets. Okay, so current asset and current liabilities, there are very like limited part in cash flow statement. That's why it is saying that assessment of liquidity cannot be done on the basis of cash flow. But cash flow is not a single item. It is obviously related with the financial statement. So along with financial statement, if you study the cash flow, it will help you in assessment of liquidity and solvency also. But if you read it separately, obviously it will not help in assessment of liquidity. So this is one more limitation. Please write it. Advantage and limitations.
So,
Yes.
like in advantage, it's like at the third point, it's written helps in assessing liquidity, but in limitations, it's written assessment of liquidity cannot be done.
Yes, yes. So that's what I'm saying, that the advantage, it is like treated as negative item in limitation. Okay. Like one more example I will give you for this. Let's say if you have a height of 7 feet tall.
Oh
Okay.
my god, so unrealistic example.
Just take this. Okay. 6.5. That's fine. So
Okay,
let's say you have a height of 6 and 5. So it is a good height. Yes,
pretty
we can
good.
say it is good. Yes. So it is advantage because you can obviously in house you can be very useful. But at the same time, it is like a limitation or there are some disadvantages. Like if you go from one room to another room, maybe your head will be,
Yeah,
you can say.
yeah, I get it. Or also, if you're traveling in a train or something.
So you can see it
Yeah,
is advantage and limitation at the same time. Yes.
yeah.
So that's it. That it is given here. Sometime something is like beneficial, and at the same time, that thing is problematic for some situation. So that's why it is written. Anything else?
No, sir. No. Thank you.
Okay. Actually, there are one or two limitation more than this, like not a suitable for substitute for an income statement, not a substitute for balance sheet. So yes, obviously it cannot replace the balance sheet. It cannot replace the income statement. It is, you can say, subsidiary statement for balance sheet and statement of profit and loss. So if you read it along with balance sheet and statement of profit and loss, then it will give you some information, then it will help you in decision making. Otherwise, it has very limited use.
So there are three cash equivalents, right?
Free cash.
Equivalents, right?
No, no, I will write it. Just 1 minute. I have just explained it in the beginning, but there are some others also, like I told you, bank draft, or like check in hand. That is also part of. First, write
Okay.
these. I will write cash and cash equivalent after that. Tell me once you have completed.
Completed, sir.
Okay. Okay. Now cash and cash equivalent. You can see here. So cash and cash equivalent includes, now it is written as theory, cash in hand, cash at bank, marketable securities, or you can say current investment.
Current investment at the beginning, right?
Current investment as beginning means
No, at the beginning. It's like also cash in hand. You mean like cash in hand and cash at bank? You mean by that you mean that thing, right? What do you say? Like net cash flow from generated from operating activities and investing activities.
these are cash and cash equivalent. The
Yeah.
investing or financing, that are different thing. They are cash inflow or outflow. These are balance.
Say.
Okay, like if you have opening balance and you adjust inflow and outflow, then you will get closing balance. Okay, so the cash and cash equivalent I'm talking about, it is related to opening and closing balance. You are talking about operating, investing, or financing, it is inflow or outflow.
Okay.
Please write this. Cash and cash equivalent includes.
Say.
Janumi, your audio is working now.
Yes, sir.
Good. Actually, in the beginning, you have connected, then again disconnected 1 or 2 times. So I thought there is some network problem. Done?
Yes, sir.
Okay. Now, cash flow statement is prepared as per accounting standard 3. Cash flow statement is prepared as per accounting standard 3. So there is one set of rules. There is one set of rules especially created for cash flow statement, which is called accounting standard 3. So there are many standards which is issued by Institute of Chartered Accountant of India, and also there are international accounting standard which is applicable in different countries. So they have various guidelines to prepare cash flow statement. So this cash flow statement right now you are studying, it is as per the like Institute of Chartered Accountant of India. So as per this accounting standard, cash is classified into 3 different categories. So as per accounting standard 3, cash flow is classified under 3 categories. Please write this. Yes, here. First, please write this sentence. Actually, there is one more thing. Check bank draft. Demand deposits. Here, if you have some space, please write this. Demand deposit with bank. Demand deposit with bank.
So what is AS3?
Accounting standard 3, there are set of rules that is created by any government for accounting purpose. Okay. So like in India, there are like many rules and regulation created. Like AS3 is for cash flow statement. AS6 is was for depreciation. Now it is AS10. So there are many such kind of rules and regulation created by government to like give the guideline to the business so that they can follow these guidelines and prepare the cash flow statement or other statements or things as per
Oh,
the okay.
okay.
So these are rules and regulation, you can say.
Thank you.
Who leave the class? Shahrukh. Okay, so if you have written this, then write this also, cash flow. So as per accounting standard 3, cash flow is classified under 3 heads: cash flow from operating activities, cash flow. If you have written the same line in this one note, if you have written this line, then you can simply write all 3 categories. You don't have to write this heading also.
Answer.
Okay, now what is the meaning of operating, investing, financing? Because before starting the concept, before starting the like solution part, the practical part, you need to understand it properly, because without understanding operating, investing, and financing activities, you're not going to solve any question. You will face many problems while solving. So first we will understand the meaning of these. Okay. So first of all, operating activities. Operating activities means like if you are doing any business, so there are some main work you are doing. It is uh, like, let's say you have a business of electronic items. Let's assume. So you are producing electronic items and selling it in the market. So that is your main business. If you are earning income other than this, then all these income are different, like not related to your business, not operating activities. Okay. So if you have deposited money into the bank and you are receiving interest, so that interest is not your operating activities. Operating activities means any income or expenses or any activities which is related to your main operation. Means either like if you have a business of electronic goods, then if you are selling electronic goods, that is your operating activities. If you are purchasing electronic related items, then that is your operating activities. If you are spending money on salary, that is also your operating activities. If you are spending money on rent of your business premises, that is operating activities. So all the income or expenses which is like related to your main operation, somehow it is related, then it is operating activities. Now if you have taken loan from bank, okay, now a student also say this that if we take loan from bank, it is also for business purpose. Yes, it is also for business purpose, but the payment of interest or taking loan comes under financing activities. Okay, it is related to our business, but we can invest money on our own and also take loan from the bank. So if you take loan from the bank, then it is financing activities. If you invest money into your business, that is also financing activities. Okay, so it is not normal operation, it is long term things. Now, if you invest money in building, that is investing activities. It is also related to operation, but it is investing activities. So, operating activities, we only cover short-term things, the regular basis items, sale, purchase, income, expenses, okay, tax, all these things come under operating activities. Now, in balance sheet format, if you see the balance sheet format, uh, current assets and current liabilities, they are on regular basis. So these two are only part of, you can say, the operating activities. But the remaining items like non-current assets, it will go in investing activities. Any item which is related to non-current asset will go in investing activities. Any item which is related to shareholders fund or non-current liabilities will come under financing activities. Now, to understand it, there is one more shortcut you can understand. First of all, financing activities I'm explaining. Now, who disconnected again? Financing activities. So, you get money first. It is not your money. So, you get money and then you pay later. This is just opposite in investing activities. You pay money first to get some return. So, to get money later. Now, understand this. Like if you purchase any building for capital appreciation or for rental purpose, anything. So, if you purchase any building or if you build a building, in that case, what you are doing, you're paying money first. You're purchasing the building, so you are paying money first, the higher amount, and later you will receive rent return. In the same way, if you purchase, like if you deposit money in the bank account, so you're paying money first, and on that deposit, you'll receive interest. So you'll receive money later, and also your like refund of your deposit after 5-10 years, whatever the time period is. So you pay money first and receive money later. It means it is investing activities. And if you get money first and you will pay later, then it is financing activities. Like you take a loan. So you're getting money first, and after that, you will pay interest or repayment of loan. So that is pay later. So that is financing activities. Okay. In the same way, shareholders fund, debentures, anything. So you are getting money first and paying the money later. So that is financing activities. So this is one thing you can use for understanding financing activities. And the second is financing activities is related with shareholders fund in financial statement and non-current liabilities. So any change in these two will come under financing activities, like share capital is increasing, decreasing, financing activities. Debenture increasing, decreasing, financing activities. Loan increasing, decreasing, financing activities. So these things will come under financing activities. Tell me, is this clear?
Yes, sir.
Yes, sir.
Okay, very good. Next is investing activities. So investing activities means why anyone will invest money to get some return. Okay. So you are paying money first to get some return later. Okay. And it is related to non-current assets. Like in non-current assets, there are tangible assets, intangible assets, long-term investment, long-term loan and advance, all these, actually deferred tax asset is a different thing, so you leave that. All other items can be included in investing activities. So you pay money first, and for like expectation of return. So you will get some return later, like interest you will receive later, dividend you will receive later, rent you can receive later. So all these things you can receive later. Okay, so I will write each item detail in the next class. So tell me if you have any doubt up to this point.
No, sir.
Anyone have any doubt? Okay, so if you don't have any doubt, then we will write it